Welcome back to Explain the Charts. Today we're taking a look at USDCAD, analyzing the latest news and chart data to determine what to watch for in the upcoming trading sessions. Recent Google searches show strong interest in USDCAD, with questions like, what is the prediction for USDCAD? And is USDCAD a buy or sell? Appearing prominently. These questions reflect the current uncertainty surrounding the currency pair. Let's dive into the news first. Recent news highlights a weakening Canadian dollar due to lower crude oil prices, with OPEC Plus planning to increase production in October. This potential oil price decline could put further downward pressure on the CAD. On the other hand, the US dollar is receiving support from stronger-than-expected US economic data, reducing expectations of an aggressive Fed rate cut in September. Traders are anticipating a 25 bps rate cut at the September Fed meeting, with the next major focus being on August's non-farm payrolls data. The Canadian dollar is also influenced by factors like BC interest rates, the Canadian economy's health, inflation, and the trade balance. The upcoming S&P Global Manufacturing PMI for Canada on Tuesday will be a key indicator to watch. Now, let's look at the charts to see how this news is reflected in price action. The daily chart reveals a clear trend reversal, with the price breaking below the 1.3500 level. This suggests a bearish short-term outlook for USDCAD. If we look at the 1-hour chart, the trend reversal is even more evident. The price is consolidating below the 1.3500 level, with potential resistance at the 1.3550 level. The 1-hour chart also shows a potential support level at 1.3450. Moving to the 15-minute chart, we see a more volatile picture. The price is fluctuating around the 1.3475 level, with strong short-term resistance at 1.3500. However, it's important to note that the 15-minute chart is more prone to noise and requires careful analysis of candlestick patterns and volume. Looking back at the daily chart, the price is clearly consolidating within a range, with potential resistance at 1.3650 and support at 1.3400. This consolidation pattern indicates that the market is trying to find direction. Overall, the current market sentiment is leaning towards a bearish outlook for USDCAD, driven by weaker oil prices and a strengthening US dollar. However, the charts also show some signs of potential support, which could lead to a short-term rebound. Traders should be cautious and focus on managing risk by setting appropriate stop-loss orders and targeting achievable profit levels. The key price levels to watch are 1.3500, 1.3550, and 1.3450. If the price breaks below the 1.3450 support, it could signal a continuation of the bearish trend. However, if the price manages to break above the 1.3500 resistance, it could suggest a short-term bullish reversal. The upcoming economic indicators, especially the S&P Global Manufacturing PMI for Canada on Tuesday, will play a crucial role in determining the direction of the USDCAD pair. Traders should keep an eye on the news, monitor these price levels, and adjust their strategies accordingly. Remember, this analysis is for informational purposes only and should not be considered investment advice. It's essential to conduct your own research and consult with a qualified financial advisor before making any trading decisions. Stay tuned for more in-depth chart analyses coming soon. Thanks for watching and happy trading! Now, let's zoom in on the 1-hour chart. Here we can clearly see the price consolidating below the 1.3500 level. Notice how the price has been bouncing off the 1.3500 resistance level, indicating strong resistance at that point. We can also see that the price is bouncing off the 1.3450 support level. This suggests that the price is trying to find a balance between these two key price levels. Next, let's take a look at the 15-minute chart. Here we see a more volatile price action. The price is fluctuating around the 1.3475 level, suggesting a battle between buyers and sellers. There's a strong short-term resistance at the 1.3500 level. We're seeing some candlestick patterns that are suggesting a potential bearish short-term trend. But remember, the 15-minute chart is very volatile and prone to noise. It's important to combine this short-term analysis with the longer-term picture provided by the daily and hourly charts.